Good morning, traders. It is Wednesday, October 16th. Taking a look at the charts, we got the SP 500 daily chart here. We've zoomed back to see the previous October, December sell-off from last year, and the market feels like it is starting to set up similar to that type of move again. Now, uh, if we take a look at the price action here, we've got a support trend line along these lows. We've got this resistance trend line across these highs. The market has been grinding into this area. You could argue that there might be some type of head and shoulders formation forming in here, but I don't really see so much of a head and shoulders formation at this point. I really just see this kind of pennant formation or this wedge, and we'll see where the market breaks from here. If it starts to break to the upside, we could see a pretty good expansion and a move to that direction. If it starts to roll over and we break this support trend line, this is where things are going to get pretty ugly. And there's enough momentum built up in this type of price action that we could see a huge unwinding in price, and we could go back and test potentially these December lows way down in this area. So we'll see how things shake out going forward. Again, we're not trying to predict tops and bottoms. We're trying to trade with the trends. If it breaks out, we will be long. If it gets to the downside and starts to break down, we'll be looking to get short. And it really doesn't matter which way the markets go. Now, let's take a look over at a couple of other markets here. Let's take a look over at bonds. Bonds are up this morning. Let's just zoom in a bit. Overall, the way bonds move, actually, I'm going to zoom out a little bit. The way bonds tend to move is that we see them rally in price and then they'll chop around, maybe make some nominal new highs for a while, and then we'll see another expansion and then it'll chop around for several months. We've seen another expansion and now it's chopping around for a few months. And I don't know if we'll see too much too much more selling in bonds. I feel as though they're trying to carve out a bottom in the last four sessions here. We're starting to see some increased volatility. More or less, I'm expecting bonds to continue to trade in one of these multi-month sideways ranges, and eventually we'll see it pick up speed and test these recent highs over here and potentially go higher, especially if the stock market starts to roll over. So overall, look at bonds in this kind of this little range here, this pendant formation, that it should continue to consolidate and build a platform before it goes higher. If we look at other safe havens like gold, gold is doing a very similar type of thing. We've seen the market rally where it rallies and then consolidates for a while, rallies, consolidates, rallies, consolidates. Very strong bullish price action is what we want. And we're waiting for the market to really kind of consolidate and just work itself out. Eventually, we're going to start to see momentum start to move to the upside, break some of these previous pivot highs. Usually when you get a trend reversal, the first pause or pullback can be bought, and you can see some very strong moves in the market. Now, if we take a look over at silver, again, gold, silver, and miners, more or less all the same trade, just some move different percentage amounts than others. Silver's nice big three-wave correction at this point. The big question is, are we going to continue to see a more complex pullback? And this is really for gold, silver, and miners. We've got a 1, 2, 3, which I see this as an ABC correction. An ABC correction is very bullish, but we may end up going into more of a downtrend, and it actually turns into a 5-wave correction where we have 1, 2, 3, 4, 5, and we get into a deeper correction here, and it's a little more bearish of a formation if we get that deep, but overall the pattern here is still very strong, and really if we settle down into this area, this is where we found previous resistance. It became a consolidation zone, a support level for price to launch. This would be a prime setup for the markets to put in a bottom and start to rally from. If we look at the gold miners like GDXJ, you can see yesterday they had another big down day. And this is seems to be catching a lot of people off guard. I mean, so many people are bullish on metals and they can't understand why they're going down. Well, it's pretty straightforward, really. The technicals, we had a huge percentage run to the upside. Price action went from a series of bull flags to more or less a double top formation, or you could argue here there is a head and shoulders formation. And then we broke the neckline. The distance from the neckline to the top of the head is typically the breakdown distance, which we got. And now the market is trading under the key moving averages and struggling, making a series of lower highs and lower lows. And we could continue to see this flush out. You can see we got some pretty good distribution selling going on. Over here, we saw volume ramping up with high volume selling as well, where over here it was high volume buying. So the momentum has clearly shifted. Price patterns have shifted. Very similar to what we saw over here. It went up, put in a topping formation. We started to see, we went from more or less average volume to some strong volume. And then we see more red bars over here as the momentum shifts and it flushes itself out until volume usually gets, either we see capitulation, heavy volume at a bottom, or we see very light volume. And that's what we're looking for. And usually the light volume means everyone's tired, they've got out of the play, they've given up on it. And when people have given up, that's when you get the big move. And that's what I'm looking for here. I'm looking for this to work itself out, flat line, everyone to eventually give up on it, and that's when the next major leg should follow suit. Taking a look over at energies real quick, natural gas up 0.5% this morning, had a really nice pop there yesterday. More or less, we're looking for it to try to put in a bottom, just like we saw over here, where we get these hiccups and a consolidation. It goes from a downtrend to some signs of a bottom to a little bullish formation, and then that breakout trend move, which is this is what we played. We got in, we played the move up, we got out. Right into this previous pivot high. Then the market did its blow off top, shook things out, and then completely collapsed. And now we're back down to the signs of an early bottom formation is starting to come into play. Short covering, buying, another pop. We're here at resistance, just like we were more or less over here. And we're letting the market do its thing. Hopefully we get in. You could argue this might be a little inverse head and shoulders. We get long. We could catch another play to new highs going forward. Looking over at crude oil, it is up 1/3%. Not a huge fan of the chart, as you know. We're just going to let it do its thing. The main thing here, we want to let the market hopefully break down in terms of it's really the only setup that I see at this point. If you look at all these moving averages, they are just a rat's nest in here. We've got a couple of these long-term blue horizontal lines. These are long-term support and resistance areas on the chart, and price is now just free flowing through these things, and they've kind of lost all their power. They were strong back in the day when we were holding support, and then we broke down and hit this support level and then sold through it. But overall, now that they've traded through so much, those levels don't really mean a whole lot anymore. What we're looking for is a breakdown through this area here, and we could see a drop down to $44 per barrel. Last but not least, take a look at the US dollar index. This is actually the UUP ETF that mimics the dollar index to some extent. More or less, the trend is up as the dollar we're seeing gold and the dollar move up together in general. More or less, we've seen what is a little bit nerve-wracking is we've seen the dollar really pull back over the last couple of weeks, and we've seen metals pull back as well. If the dollar finds support here off this blue moving average, this 50-day moving average, if it starts to rally, it might continue to put a little more pressure on the gold and miners going forward. But again, at this point, the US dollar, the Canadian loonie are kind of the safe haven currencies. The Canadian dollar has really started to perk up the last couple of trading sessions, being positive interest rate bearing currencies. And so they are the safe haven along with gold, which is why we're seeing the dollar move higher. We're seeing gold move higher. And the Canadian loonie may end up becoming more of a safe haven asset going forward. With the dollar being as high as it is, the Canadian dollar being somewhat undervalued, you could argue, we are looking at potential money rotating into the Canadian dollar going forward. So it's going to be interesting to see how things unfold. But overall, the safe havens continue to hold up in bullish patterns. The dollar is at support, and I am expecting we'll see it start to rally here again over the next few sessions. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.